Welcome, everyone. Let's jump right into this masterclass explainer. Today, we're laying the absolute groundwork for your 2025 BPT exams by tackling Chapter 1, Ethics, Law, and Sustainability. I'm going to be speaking at a pretty deliberate, moderate pace today, mainly because we have exactly 22 core syllabus items to cover. And listen, these aren't just passing concepts, right? They are the fundamental rules that govern the entire accountancy profession, and honestly, they heavily dictate your exam success. So get comfortable, focus in, and let's conquer this material together. Here's our game plan for today. We're going to cover 1. Core ethics and threats. 2. Tax practice and procedures. 3. Anti-avoidance and legislation. 4. Compliance and sustainability. And finally, 5. Exam strategy and tips.
Okay, let's dive into this. Section 1. Core ethics and threats. So, there are 5 fundamental principles you absolutely must know. I want you to literally memorize this mnemonic right now. IOPCP. That's integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. Now, I want to pause deliberately on that first one. Absolute integrity is the bedrock here. Without it, the entire accountancy profession just collapses. It means being truthful and honest in all professional relationships. And no, not just when it's convenient, but all the time. If an accountant lacks integrity, honestly, no amount of technical tax knowledge is going to save them.
But, of course, in the real world, those fundamental principles come under attack. Enter our second mnemonic, SSFI. These are your 5 threats: self-interest, self-review, advocacy, familiarity. Familiarity is when you've known a client so long you kind of forget you're actually supposed to audit them, not just play golf with them every weekend. And finally, intimidation. Recognizing exactly which of these threats is active in a given scenario is a massive exam skill. And what do we do when a threat appears? Well, we rely on our mandatory defense mechanisms. You must implement robust, firm-level and profession-level safeguards to either eliminate the threat or reduce it to an acceptable level. And if you can't do that, you literally must refuse the engagement or resign. No way around it.
When you're inevitably faced with an ethical conflict, you don't just guess what to do. You follow these 6 crucial steps, exactly like a strict scientific protocol. Step 1, gather the relevant facts. Step 2, identify all relevant parties. Step 3, determine the specific ethical issues. Step 4, apply the fundamental principles we literally just learned. Step 5, check your internal procedures, like, say, consulting an ethics partner. And Step 6, evaluate alternative courses of action. I really cannot emphasize this enough. Documenting this exact 6-step process in your answers is absolutely the most exam-smart approach you can take. Moving right along to Section 2, tax practice and procedures. We're smoothly transitioning from the realm of theoretical ethics into the strict, real-world procedural rules. All right, next up, we have the Standards of Professional Conduct in Relation to Taxation, or PCRT. Under PCRT, tax planning must be client-specific, entirely lawful, fully disclosed to HMRC, respectful of intended parliamentary results, and completely documented. But beyond the PCRT, you also have absolute duties regarding confidentiality and conflicts of interest. And let me give you a vocal warning right here. Ignoring a conflict of interest where you're acting for 2 opposing parties or improperly breaking client confidentiality, that will flat out ruin careers, for sure. You must navigate these rules perfectly.
And this brilliantly illustrates a crucial distinction you've got to establish before taking on any tax work. Are you acting as an agent or a principal? When you act merely as an agent, you deal with HMRC, sure, but the client retains the ultimate responsibility for the accuracy of their information. However, when you step up and act as a principal, providing bespoke tax advice, your firm takes direct professional liability for that advice. Knowing exactly which hat you're wearing is legally and professionally vital.
So what happens when you discover HMRC has made an error, like, say, issuing a refund that's way too large? You need to follow these 4 sequential steps very carefully. Step 1, advise the client of the error immediately. Step 2, check your engagement letter to see if you already have the authority to notify HMRC. Step 3, if you don't have that prior authority, you must obtain explicit client consent to disclose it. And Step 4, if they withhold that consent, you must consider legal advice or resignation. Remember, you can never, ever correct an HMRC error on their behalf without proper authority or client consent.
Okay, Section 3, Anti-Avoidance and Legislation. We're now entering the complex and heavily tested world of the government's anti-avoidance arsenal. You absolutely must understand the strict contrast between avoidance and evasion. Tax avoidance is the legal minimization of tax bills, though it's still subject to strict rules. Tax evasion, on the other hand, is the illegal suppression or falsification of information. It's a criminal offense. I want to pause deliberately here to highlight a massive update. The Finance Act 2024 has actually increased the maximum prison term for the most serious tax evasion offenses to 14 years. So yeah, this is serious business, and you must never, ever facilitate evasion.
So the crucial point is understanding how the government actually stops aggressive artificial tax avoidance. They basically use two main tools. First, the GAR, which uses a double reasonableness test. It literally asks whether it would be reasonable to conclude that the tax arrangements are unreasonable and abusive. Kind of a mouthful, but essential to know. Second is the Ramsey Doctrine. This allows the courts to take a purposive approach. Basically, if a series of prearranged transactions has absolutely no commercial purpose other than avoiding tax, the courts can look right through them to what Parliament actually intended.
Zooming out to an international scale, we have BEPS, that's base erosion and profit shifting. And importantly, Pillar 2. This is an OECD initiative imposing a 15% global minimum tax. Pay attention to those threshold details. It applies to massive multinational groups with an annual turnover exceeding 750 million euros. And it took effect for accounting periods starting on or after December 31st, 2023. It's a major anti-avoidance and sustainability measure.
Now, under the DODAS and PODAS reporting regimes for tax avoidance schemes, promoters absolutely must notify HMRC and get a scheme reference number, or SRN. If they don't, promoters face up to £600 a day in penalties, and users face a £5,000 penalty. We also have accelerated payment notices, or APNs, which force taxpayers to pay upfront, completely removing any cash flow advantage during a dispute. And I really must warn the class here, under Finance Act 2024, HMRC can now outright disqualify directors who promote aggressive tax avoidance schemes.
Section 4, Compliance and Sustainability. Get ready. I need you all to prepare yourselves for a heavy, rapid-fire dose of essential regulatory thresholds and environmental duties. Take a mental picture of this ultimate compliance megatable. If you trigger the GAAR, it's a massive 60% penalty on the counteracted tax. The Senior Accounting Officer, or SAO regime, applies to companies with over £200 million in turnover or a £2 billion balance sheet. Large businesses failing to publish their tax strategy, they face a £7,500 initial penalty. Money laundering can literally get you 14 years in prison. And if you suffer a GDPR data breach, you have a very strict 72-hour window to report it to the ICAEW. Don't mess those up. I want to emphasize this next distinction with absolute clarity, mostly because the examiner loves testing it. Tax compliance reporting goes to HMRC. But if you suspect money laundering, you do not go to HMRC. Instead, you send a suspicious activity report, a SAR, straight to the National Crime Agency, the NCA. Furthermore, if you tell your client that you're actually making that report, that's called tipping off. And tipping off your client is a literal crime. You need to keep these two channels completely separate in your head.
Next, let's connect the dots on sustainability. Listen, it's not just a buzzword, it's a major driver of modern tax policy. Governments use environmental taxes, things like the landfill tax, the plastic packaging tax, and climate change levies, to financially discourage harmful behaviors. Combine this with the Pillar 2 minimum tax to stabilize global funding and the requirement for large business tax strategy transparency, and you've got cohesive sustainability drivers that you can absolutely expect to see in your exam scenarios.
Section 5, Exam Strategy and Tips. All right, it's finally time to take a breath, act like a coach for a minute, and translate all this heavy theory we've been discussing into actual, tangible exam marks.
Now, what's really interesting about this slide is that it reveals the absolute secret to acing ethics questions. First up, always check the engagement letter. It literally dictates what you are allowed to do. Second, always apply professional skepticism. I mean, if a client lied you once, you should question everything they give you moving forward. Remember your exact relationship too. An employee cannot just resign the way an external agent can. And most importantly, never write about ethics in isolation. You want to integrate these ethical steps directly with the tax technical calculations you're performing.
As we wrap up this masterclass explainer, I want to leave you with this provocative thought. Picture yourself sitting in the exam. You've just found a massive HMRC error that heavily benefits your client. You ask for explicit consent to disclose it, and the client looks you dead in the eye and actively refuses. What is your very next move? Are you documenting? Are you talking to the ethics partner? Are you preparing to resign? Ponder your ultimate ethical obligations on that, because that is exactly the kind of professional dilemma that will stand between you and a passing grade. Keep studying hard, and I will see you in the next explainer.